Sure.
Yeah.
Thank you for your
Thanks. So let me know if you can see my screen.
Yes, it's visible.
Oh, great. So actually, I had a very lengthy one before this, so I tried to make it a little interesting this time by adding some pictures and making a little, interesting for the viewers to kind of see and understand that how, when you look at these startups, how one looks at it, right? One second. Okay, so basically, when you start with your pitch, because you have 5 minutes in hand or 5 to 10 minutes in that case, you need to understand that everything that you have in the presentation will not really, because the investor would be seeing more startups. It won't be that you probably would be the last one. Let's assume you're the last guy who's gonna go in. Then in that case, you would not want to just give the basic presentation out there and give basic general jargon about the proposition that you're trying to do. Rather, I would say that you create a story around it and then you narrate the story. And it could start from your pain point, how you found the pain point, and how you kind of created around it. Why I'm saying that is because anyone who looks at it would be able to resonate well with something like this, where they say that, okay, stories are something that goes deep inside us, right? So you kind of don't forget that. And especially if you're towards the end of it, if you're the first guy to go in for a pitch, obviously the investor has 100% attendance on what you're saying, so he's attentive and he understands what you're looking at and sharing. But the moment you are towards the end of it, the possibility of the investor also losing interest is also pretty high. So you need to kind of see to it that you create that interest up. How do you do that? You create a story around the whole proposition and kind of narrate it. So that's how I say that, when you look at it, you create a story around it. So when you start with your story, obviously you talk about your pain point, how you came up with it, which is great. But then in that case, you need to kind of narrate a story around it, saying that, listen, here is a problem that I've identified. Here is a picture in front of you, which kind of talks about, I'm just giving you these pictures. So it's easy for one to understand that where the pain point is, right? So, you identify a pain point. So you look at the Zara picture right in the center, right? So there's a huge queue outside the store. And similarly, a huge queue would be inside the store at the cash billing counter. Now that's a common problem at any of the Zara, H&M store, or even Decathlon store, and any high footfall store that you see in the country, right? So how do you kind of solve that problem? It's a major problem because when I go for shopping, if I see a queue like that, listen, if unless and until I'm too desperate for the brand, then I'll take that pain to stand. But if I'm not, I'll walk away. So what happens is the brand is losing a customer by actually looking at all this. The brand kind of lose out, the customer lose out the interest on the brand. Then probably I won't go back again. Why? Because I know it's crazy line out there, so I don't want that, right? So now what the brand did was, if you look at the right here, it's a kiosk machine. It's a self checkout machine that they've created, right? So it's a fantastic solution. It's not only with Zara, it's also with Decathlon. If you go to a Decathlon, I don't know how many of you are Decathlon users. If you go to a Decathlon store, now they have a self-checkout machine. So that's a fantastic solution to kill the queue at the cash counter. The pain point here is that, you kind of, the moment you go to a store and you see, you picked up, say, 4 dresses to buy, you go to the billing counter and there are about 40 people standing in front of you. You leave the clothes and you'll walk out of the store because you don't have the time to wait for another half an hour to just to clear the bill, right? So the self-checkout is a solution to the pain point that you've identified. So identifying a pain point and clearly defining that what is the solution kind of interest investors. So you need to kind of narrate a story around it or create a picture around it, saying that, listen, this is the problem and this is what the solution kind of reminds, right? Nowadays, what we see is, when we see a pitch deck, the first page would talk about, the pain point. The second page would talk about the solution, but then those are basic jargons. You're not narrating a story. What you're doing is you're putting a bookish language out there. You need to kind of paint a picture out there, saying that, listen, imagine you walk into a store. That's how you start talking to your investor. When you go to a store, you put that investor in that pain point solution, saying that, listen, would you find a pain like that? If you find the pain, then and you can connect with my pain, I think that's the problem that I'm trying to solve here. And this is how I solve it. This is the solution that I've built, and this works robustly. So that's how it will create interest for investor. Identifying the pain point, image crisp and clear, and then following on with the solution immediately, right? So, like I said in the beginning, it is all about storytelling. So you stick with that, and that helps you. So that is something that you kind of talk about immediately in the first slide, and you see in an elevator pitch you can't, आप पूरा अपना प्रेजेंटेशन का स्लाइड पढ़ के नहीं सुना सकते हो, वो पॉसिबल नहीं है. उसमें घुसना भी मत, because you typically have 5 minutes, which means if you have 10 slides, you have 30 seconds per slide. So you have to be fast and you have to be crisp to the point, right? Then you talk about the team. Now in the team, some people, what they do is they kind of put the whole team up. Not required. Only the founding team is required. What is more important, right? So you put in the founders. So when you talk about the founder, straight away, what is required is, when you talk about the founding team, is that what is the KRA of every person? Mostly what, and this is very important. Why? Because it creates an impact for an investor. Why? Because if you show me a presentation where you put your founding team there, you said one is a co-founder, the other is also co-founder, that doesn't define who's doing what role, right? So you need to clearly identify who's the CTO, who's the CEO, who's the CEO. अगर वो define नहीं है, आज define करो, because that's very important. Once you define, put that there. And when you put the picture and you put the description, write 2 lines about the guy. If you don't want to write lines, that's also fine. Put logos. For example, if you work with PwC, put a PwC name there. You work with American Express, you put an American Express logo. So what happens is that also attract people. So see, reading is one thing, but the moment you see a picture, it attracts people, eyeballs. So it kind of says that, the team comes from a very qualified background. You're from IIT or a non-IIT, whatever education background you have, you put that there. So they say, okay, an MBA from a regular school, here worked with multinational companies, now doing a startup. Understood. So the team needs to be defined clearly. And most of the time, what I've seen is, entrepreneurs do have some mentors who support them on and off, but they do not mention them in the slide, right? So that needs to come out, right? So you need to put your mentors out there. And because the mentor are real value asset, because of the fact that, for example, let's say, you have a healthcare startup, and you have one of the leading hospital CEO as your mentor, right? The moment I see that gentleman's name, or the lady's name there, whoever is the CEO of that hospital, then I'll feel more confident about the whole proposition, because of the fact that I believe that a credible person like that CEO of the hospital, if the person is mentoring you, that means there is some credibility in the whole proposition. So that adds up value on it. So that is how you kind of take it forward from there. So in similar way, you need to also identify the right mentor. Now, for example, if you're running let's say a D2C brand, you're into cosmetic, let's say, you're building a cosmetic brand, but you have a healthcare, not a healthcare would be, let's say a medical device expert as your mentor. Now that doesn't resonate, right? So उनका mentorship आपको value add नहीं देगा. You need to find the right mentor for your business. That again has two parameters. One is, when you talk about a product, right? So there could be a technical mentor, there could be a business mentor. So you can say that, listen, I have a business mentor and a technical mentor. So that also gives a lot of boost to the investor, saying that, listen, okay, now the founder has thought through well. Hence, they have kind of actually identified the right set of mindset and like-minded people to support them to scale the business up, right? So that is the value that any investor would like to look at. So do not forget to mention the mentors on the team slide. It adds a lot of value. Here, when I say advisor, I'm not referring to investment bankers. Just be clear on that. So don't, because investment bankers are also called advisors. So don't put that out. उसका कोई value add नहीं है, right? So fundraising can be done by anyone. That's not what I'm looking at. They do their job good, but here as an investor, I would want to see the founding team. I would want to see the key team players, and I would want to see any mentor who actually works along with the founders in growth of the business, right? So you talk about this, then you come to the market size. What happens is that if you look at the left slide, obviously TAM, SOM, uh, everyone knows this, right? So you would know what I'm talking about here. But from this whole slide, what the problem is, entrepreneurs क्या करते हैं कि आपको ये पूरा दे देंगे कि this is what the whole market looks like, and in some cases you just talk about the total addressable market, okay, which is not really your real market. Your market is much smaller. So when you come to the market size and with the elevator pitch time that you have in hand, you can briefly just say that, listen, for example, you're selling, again, I'm picking on the same example of a cosmetic brand. Say that, listen, my addressable market, say, let's say, for example, is $1 billion across India, let's say, right? But that doesn't mean as an investor, I'm interested with that fact that, oh, you have $1 billion. Yes, I know the market is large enough. As an investor, I understand that market. But what is your real addressable market is something that I would want to know. So for that, you would have to kind of narrate and say that, okay, fine, I'm based out of Jaipur. My brand is kind of primarily looking at, say, Jaipur and Rajasthan as a sector, right? So we say that, listen, my market sales in Rajasthan needs to go up, and that's what I'm trying to achieve. And selling in Rajasthan would give me this much of a market share. So this is what my real market share is for the next 1 year. So that will kind of, for me as an investor, when I look at you and I look at when you give me this input, I feel confident about the fact that you know where you're headed for the next 1 year or 2 years. You're not talking out of thin air where you say that, listen, oh, acha, pura India mera market hai, main shuru kar raha hu sale. So it doesn't add up, right? If you're selling any brand, again, you have to create distributor network. So you pick city by city. You can't just go out and say that, listen, oh, I'll pick 10 distributors in Delhi, 10 Bangalore, 10 Bombay. You can't scale like that. You need to pick geographics one by one and move accordingly. You catch hold, create one sector, put your foothold strong, and then you expand into the other cities. That's how you do it, right? So that's primarily the next 1 2 year plan is something that the investor is more interested in. Let's be real on that. मार्केट अपॉर्चुनिटी कितना बड़ा है ये सबको पता है, ग्लोबल अपॉर्चुनिटी है या नहीं है वो इन्वेस्टर देखते ही बता देता है. बट आपको इनपुट देना है, आप दे सकते हो, बट आपको ये जरूर बताना है कि अगले 2 साल आप क्या करने वाले, अगले 2 साल आपका मेंबर मार्केट शेयर क्या है. So that should come out in the market share slide. Actually, the business model or unit economics, I mean, I'm sure unit economics would be something that you would be looking at, but it's very important because sometimes what happens is the entrepreneurs don't even make unit economics. So for example, if you're building a brand, building a product, selling a product, then in that case, how much is the BOM cost of the product? What's the bill of material for you? What are the margins on it? What is the distribution margin? What's your net revenue? What's your gross revenue? That should be clearly defined. And it won't take more than 30 seconds for you to explain that to the investor, because that is where the net revenue, net margin, and gross margins are the key factors. If you're a brand company or if you're selling on e-commerce platform or anything on those sides, unless you're a SaaS company, then it's different. A SaaS company would look at things on a different revenue. Their revenue model is totally different. Unless you say that, hey, I've established distributorship in US, my SaaS company is in India, but I'm selling it in US, my clients are in US, so I have a distributor network there who takes my margin out, which is okay. Then they understand that, so you talk according to that. So this is primarily what you would have to say when you talk about the business model. In the financial piece, I won't take much time. I'm sure most of you would know of this, but primarily what I would urge you to is, if you just look at the first line here, which talks about your past and current revenue, that's very important. That talks about your traction in terms of what you've done, right? So you talk about your current monthly revenue that you do. You talk about your past in terms of your financial, how you scaled up, right? So you that shows how you growing every month on month. So that will give me a indicator to say that, listen, is the product even moving forward or not? Are you moving to profitability? That's subjective, right? So I'm not expecting you to hit to profitability, but there would be a window saying that, listen, hey, 3 years from now, 4 years, 5 years, whatever, depends on how you kind of scale it up. So that's how people would want to see, right? One very important thing in the competition slide. So this is a typical competition, chart that everyone puts in. But everyone knows when you create that competitive landscape, I've never ever seen that you say that, listen, hey, if you pick all of you, all of you out there, you would have seen your uh, competitive landscape. I've never in my life seen a competitive landscape where I say that, okay, as a founder, you have, say, five competitors in your place, and according to your competitive landscape, none of them are better than you. You're the best. But the reality of the fact is that investor को भी पता है और आपको भी पता है कि एक आधा प्लेयर आपसे ऊपर होगा या नेक टू नेक होगा, right? So nobody kind of talks about that. So if you from the front end come and tell me that, listen, hey, I'm a leader in this sector for so and so reasons, understood. But then you also need to give me an input saying that, listen, hey, although I'm a leader or at par with my competitor, but here is one company which I think is neck to neck with me, and this is what I'm trying to do different in order to kind of overpass them also. So that again gives me a benefit of a confidence in me that saying that, listen, hey, the entrepreneur is thinking right. They understand what the competition is doing. They know how to move forward and they know how to beat the competition, right? So key factors when you look at competition, obviously you talk about pricing. If you're a first mover advantage, you talk about that. If you have some patent algorithm, you talk about that, and whatever the USP that you think would be fitted, right? And that's how you kind of move forward. In the funding history, and I've seen this many a
Question
times.
here.
I'll take the just I think two more slides and then we take the questions, right? So on the funding details, when you talk about the funding history, wherein see for me it's important. Most of the time, entrepreneurs would straight away jump to funding ask, which is okay. I need 3 crore, I need 1 crore, I need 10 crore, whatever that amount is. But they don't talk about how much have you as founders invested. That's very important for me because that shows a confidence of the entrepreneur in the whole idea and the proposition. You probably wouldn't have invested real cash, but you would have invested certain amount of time, your sweat, but you would have invested some sort of cash also. So whatever it is, even if it's a 5 lakh or a 1 lakh, it kind of shows a confidence in me, on the whole proposition saying that, hey, they've done something. Even if it's less, I'll be more than happy. Why? Because I'll say, oh, fantastic, man. I mean, he's built a platform for 5 lakhs. He's doing revenue of 50 lakhs. That's amazing, right? So you kind of really made something out of it. So that kind of shows in, right? So you need to put in how much have you invested of your own money. That's called bootstrapping. Then you come to, if you've done some seed investment, raised some seed money, or taken some loan, or you've taken some convertible notes through some incubators and accelerators, you talk about that. And then obviously you talk about how much are you looking to raise and the use of that fund, right? So in an elevator pitch, the use of the fund, would you don't need to describe that there. But in an elevator pitch, you need to tell them how much have you invested. You can straight away say that, listen, I've invested 5 lakhs of my own. I've raised 10 lakhs from the incubator. That's the investment that I've done. That has gone into the company. Now I'm looking to raise, say, 2 crores. That's it. The slide ends there for you in an elevator pitch. The use of the fund factor will come in the Q&A part of it. You don't want to actually eat away the Q&A time, right? Because you have to be really mindful of the time that you have, just which is only 5 minutes. So you have to see to that you cover all that in 5 minutes, and if possible in 4 or 4.5 minutes. Why? Because you would rather give a 30 seconds more to the investor to ask you more questions, because the more you talk to him or her, it'll actually help you understand. I mean, help that investor understand your whole proposition better, right? So that kind of gives them a better room. Last, I mean, this is basically on the presentation slide only, where you talk about how much have you invested, with you, right? You should know why one should invest in you, right? Why do you think that this is the best place to invest? Why do you think that this is the best last 10 seconds probably you can say this out. And if you have some global and this is the opportunity that I'm addressing to, that also brings in some confidence. And there's always a good time to change, right? So You should be positive on that, and you talk like that. So this is something that is very important, which I feel, especially because elevator pitch is gonna be physically present. You're gonna do a physical pitch, right? You're gonna be physically present there. So you need to be enthusiastic, right? So you should have that confidence in you when you talk about your proposition. You should your entry barrier into the proposition. When you talk about your USP, right, or your differentiator, it could be a repeat customer also. For example, let's say you're selling any brand which is a daily use brand, let's say, right? Or then in that case, or let's say Netflix, an example, right? Netflix is a fantastic example to talk about. So you took up, so for example, you're creating a Netflix of India. So you say that, listen, I started in last year with about 10 customers. Today, which is year two, I have 30 customers, but my year one, all the 10 customers are still my customers. They've renewed the membership. So it's 100% repeat rate. That is the real value that comes in, right? That 20, the 200 extra customers, or the 20 extra customers are a add-on which will get repeated the following year. But right now, what is more important to me is that people who stick with you in year one are still sticking with you on year two. There could be some drops, which is okay. Investor understand that. But if it's going to be a significant drop, then I think you as an entrepreneur, you should rethink on the business model. That are you doing something wrong? It's a correction for you. But at the same time, if you're doing right and you have a good number to throw, then you should throw that number out to the investor, because then he'll be more confident that yeah, this is something which is actually sticking with the customers. Because if you have sticky customers with you, that's how you're going to scale. That will kind of drive your month on month business growth also. uh, Show the love. What it means is that if you have some, say, a well renowned guy who really loves your product, could be anything. Or if it's a SaaS company, then let's say Dell loves your product, or some big multinational company loves your product. You take endorsement from them, so that, listen, they've been using my brand. You can check with them. They are my customer who endorse me everywhere. They refer me to other clients within their network. So that also helps it. Whenever you pitch, try to see that the founding team is there. That's very important, right? Some do's and don'ts. Okay. So, I mean, this is primarily for investors also and for entrepreneurs also, where when you're pitching to investors, what they don't like, right? So if you have a incomplete product, I would say that, think about a way of completing the product and then only reaching out to investors. They would want to see some proof of validation. It could be that your pre-revenue, which is okay, no problem, but you need validation. If you say that, listen, I have built a cosmetic product and this is the best, I need a validation from some medical or some doctor, or say some governing body, which kind of says that yeah, this is a better product than what is existing in the market. Probably you don't have customers right now, which is okay, but if I get some validation, it kind of brings in a lot of value. It brings in a lot of support. Incomplete team, when I say incomplete team, what it means is that usually investors would want to see two or max to max three people as co-founding team. Not that single founders don't exist, single founders do exist, but incomplete teams would mean that even a single founder sometimes says that, listen, hey, I'm working right now somewhere, but the moment I'm able to raise money, I'll jump in full time. That doesn't work. If you're two people team, one is working full time into the business, the other is working somewhere else, which is understood and partly involved with the company, and the other will join the company if you, as and when you do the fundraise. That's also understood. But if you say that, listen, hey, I'm doing this on a like a part time right now, the day when I raise money, I'll jump in full time, doesn't add up. It's a total no. A non-mentorable team. If you're not open to suggestions, if you're not open to listen to investors or your mentors or your guide for that matter, it's a total no-go for any investor. Nobody would want to touch you. Let's be real, because of you need to put yourself in investor shoe. Would you want to invest in a company where the entrepreneur kind of listens to you and takes your advice? See, it's not necessary that the investor is talking right? He might be also talking something. Probably he's missing out on something, which is okay. So what I personally tell entrepreneurs is that, listen, keep an open mind. If somebody is giving you some advice, take it, right? If you don't resonate with the idea, then you can debate on it. But that debate should remain a debate and not get into an argument. The moment it moves into argument, it shows that the founder is non-mentorable, right? So there are ways to handle situations. So you should be open about it. Because if you can't handle that situation, tomorrow if the company slightly grows big, then you will not be able to manage a team itself. So there are a lot of questions that the investor will come start thinking about it. Don't come up with any idea saying that, listen, it can't be a Me Too product, right? There should be some entry barrier. There should be some differentiator that you have. And then last but not the least is coming out and talking about unrealistic ask and unrealistic valuation. What it means is that आपने अभी product बनाया है, आपके पास revenue भी नहीं है, आपके पास traction भी नहीं है, forget revenue, traction भी नहीं, right? And suddenly you want $1 million. That doesn't add up. See, even if I give you $5 million, you'll be able to burn that in 1 year. Anyone can do that. Even I can do it. Anyone, right? But that's not the smart. That's not called a smart entrepreneur. Smart entrepreneur is called who does a proper calculation in terms of what he really needs. So when you go to any investor and ask, it should not be random out of the box saying, okay, I need 3 crores. 3 crore for what? Okay, out of 3 crore, I've seen instances where people say, oh, out of a fundraise, I need to spend say 40% in building up the team, 40% in tech, 20% in marketing. The moment I say 20% in marketing, so if I break it down, say 3 crore raise kar rahe ho, 20% marketing, which means 60 lakhs. In 1 year, you're going to blow up 60 lakhs in marketing. What are you going to do? Have you thought through? So there, the entrepreneur will fizzle out. Why? Because they've actually not done a deep thinking around it. What is required? You can't tell me that, hey, I'm going to hire a team. वो तो already team में आ गया ना. 40% of the money is going into team. So what is 20%? It can't be social media, right? So you have to think through deep and you need to think right. That's more important. It is not for the investor. Forget the investor. It's for you, for your own benefit. If you're able to think right, you'll be able to structure it better and scale it. And fall into that comes valuation, which is a pain point, both for the entrepreneur and for the investor, right? See, if you're able to understand what you're trying to do, and you need to also understand the mechanics of how the equation works in the ecosystem, right? Uh, there could be a possibility that what you're asking, there would be some investors willing to invest in it, but not everyone would be willing to invest in it. So you need to kind of do a proper uh, thought process on what valuation you should ask. Now, in certain sectors, there are certain multipliers that work, right? For example, a tech company, which is a SaaS company, would probably give me a 10x multiplier, 10 to 12x kind of a multiplier. If I'm looking at a consumer brand, it would be anything from a 4x to about a 7x kind of a multiplier. If I'm looking at a QSR outlet, something related to food, would be anything from a 3x to a 5x multiplier. And these multipliers are on my revenue that I do, right? There also there's a big difference. In some cases, people kind of multiply on the basis of the GMV, which is not the fact. I mean, for example, if you're selling, let's say, cosmetic product only on Amazon and Flipkart, and your, let's say, revenue is 1 crore, but that's not your revenue, that's GMV, because that's what you're selling, right? On the platform. But Amazon and Flipkart would take away close to about 35% of your revenue as their transaction fees. So what you're left with is not 1 crore, but actually 65 lakhs. That's what your revenue is. I'm just giving a basic top of the line numbers, right? So obviously there would be more discussions around it, but the multiplier then will get affected based on 65 lakhs, not on the GMV, is what I'm saying. So now again, I would say every investor is different on the valuation piece. You can try your luck by seeing that if there is something that can be done, but it should not be so crazy enough that tomorrow, you would go back to the same investor and talk of a number which is significantly not accepted. For example, there was a very good company which came to me and we got them to the pitch room. The founders were asking 100 crores. After the pitch, we declined it right there in front of him. We said 100 crore will not fly with us. I took him out, had a brief discussion. Within 10 minutes, the guy came back to the room and said, I'm open to look at 35 crores now. Although the deal was good, we had to let it go. We said we will not entertain such thing. Reason, a sensible investor will say that, listen, if an entrepreneur doesn't think right and just trying to fool around his time and others' time, I mean, he's not sensible enough. So you need to, if you're bluffing, you bluff in a proper way. I mean, just don't, throw out any name, any number. So you think through before what you say, because that's very important. Because whatever you say will be held up against you. You'll be accountable for what you talk, right? So if you say 100 crore, that means you said 100 crore. Now, if you roll back on it, or 10, 15%, 20% is understood. If you go beyond the 50%, that's crazy. I mean, why did you even in the first place said 100 crore, right? You kind of create a negative impression of yourself. Forget the company, about you as founders. You should remember one thing: as an investor, yes, will invest in the company, but more than that, he'll first check the founders out. If the founders are of his caliber, where he feels that they are mentorable, they're good, and they have the capability of scaling the company up and making it big enough, that's where the value comes in. Because I'll give you one more example, right? And then we'll open up for Q&A. So there's this company from IIT Kanpur where we invested, right? They were primarily focused on building solar panel cleaning devices. It's a robotic company which was built for cleaning solar panels, right? We invested in them. Now, COVID happened and the company went down, right? So ideally क्या होता है कि company shut down हो जाता है या they'll survive how much they can. But what they did was they re-engineered because they were engineers, so they kind of started doing some innovation around, right? And at that time, the given need of the hour was ICU ventilators, right? So they started building ICU ventilators, robust, compact, very easy to carry ICU ventilators. And today, in no time, I mean, literally like 3 years, they own 20% of the market share, right? So that's commendable, right? So what I'm trying to say here is that if the mentors wouldn't have supported them, or would have said ki nahi, don't think out of the box, you were doing solar, stick to solar, right? If that's the case, or your mindset is, no, I was born to build solar or do solution solar, then you would have been stuck there only. But because somebody thought about the idea and shared with the founders, and the founders were open to do innovation around it, that led to a better result. Today, they are doing much more revenue what they were actually doing with solar. They significantly scaled up. So that is the value that comes in. So, you should be always open to ideas and suggestions. Karna nahi karna, that's secondary, but be open about it, right? And agar nahi karna, so there is a very polite way of saying no, this can't work, right? You need to kind of learn that art and learn to say no on that, and be clear. Because if you be clear, then it's good. If you make them hang around, it won't be good enough, right? So I think that's it from my end right now. So I think any questions, happy to take it. Open to questions here.
Yeah, Pratik, go ahead, please.
Yeah, thank you so much for a great presentation. And my question is still around that valuation part.
Yeah.
How do you? So I have applied through INA, and there was a question from INA that how do you value yourself pre-revenue?
Right.
And so my question is again, you guys see so many deals. So do you help even the founders to get the right kind of valuation?
So, see, if the deal is good, we'll kind of sit around a little, but we won't sit around for long.
Okay.
Right. What I'm trying to say is that I personally see close to about 20, 30 deals every day coming to my inbox. Now, it's practically not possible for me to sit with every entrepreneur and help him explain the valuation bit, right? If it makes sense, if it adds up, fantastic, we'll kind of take it forward. But if it doesn't, then we let it be, because all the best is what we can say, right? But if the value proposition is interesting enough, then we'll probably do one round of discussion to understand what is that we're missing out on here. Why is the valuation so high? If that's the case, then we'll kind of sit with the founder and try to explain our bit of it. And we don't spend much time. When I say that, what it means is that we'll give a typical range as to what investors look at, right? And giving at the number that your company would be doing, we'll say that, listen, this is approximate ballpark number, that because eventually it's my investors who are going to invest in you, right? So they need to take the final shot. I am just preparing the ground for you and for the investors to say that, listen, yeah, this is a good ground to play on, right? So, and all terms are fairly been discussed and understood between both the parties. So that kind of helps it, right? So, and because we've been around, we know our investors and we know how they think. So we have a fair understanding as to where and at what number would it go and play. Again, there are tons of startup pitches, pitch decks that we see, and it's practically not possible to fund everyone also, right? So, like last year we did close to about what 31 odd deals, and we every year we see close to about 10,000 decks. Now, see the turnaround ratio. I'm not even primarily doing 5% of what I see.
Yeah.
Getting my point.
Sure.
So the point being that that's how it is. You look at other networks also, they'll be doing probably much more than that. Their numbers will still be lower. They won't be even touching 10% of what they see. So what I'm trying to say here is that you as founders, it's your duty, right? Because you want the funding, right? So you need to kind of present the best thing forward. You need to see to it that, you talk about, see, it's as simple as that. Think about this, like, let's say, I can afford, for example, a 10 lakh car, right? But if somebody comes and tells me that, listen, there's a 25 lakh car, would you want to buy it? I'll say, no, man, that's not my budget. That's not what I want to do, right? It's totally out of my bandwidth. So I'll let it go, no matter how much I love the car. I'll still, because I know what my budget is, and I know, and typically angel investors would know what they're looking at, right? If you're not, and if you're not clear on कि भाई मेरे को नहीं समझ आ रहा valuation, then you do a convertible note. You're getting my point. You do a discounting.
Does INA have convertible notes? Like they generally
We do, but we prefer doing a price round, to be honest.
Okay.
We prefer doing a price round. We've done couple of convertible, but literally handful, to be honest.
Got it.
Like I said, that we prefer doing a price round because we feel that price round would kind of make more sense in some means for investors. See, you need to think from an investor's point of view also. It's not only about the entrepreneur. The investors are at this given stage are taking the maximum risk by stepping in and investing in the company and shaking hands with the founder. Because typically any company which gets started to scale, it'll take at least 5 years. That's when your Series A, Series B happen. वो तब तक उनका bet safe हो जाता है. और other company shutdown होनी होगी तो first 5 years में हो जाती है, right? So the majority failure, if you look at the stats also, is in the first 5 years. So if somebody is taking that risk of coming in that early, you can't expect him to make returns like a Series A guy. The angel would want to make a little higher. And there's nothing wrong in it, right? So
Totally
from that angle, आप अपने आप को इन्वेस्टर की जगह में डाल के देखो. अगर मैं आपको एक डील दूंगा ना, तो आप भी वैसे ही बिहेव करोगे जैसे इन्वेस्टर.
I have done an angel investment, so I know that what
you would know it. So you would know.
investor. So yeah. Thank you so much for answering.
Thanks, Pratik. Let's move to the next participant. Priyanka, please unmute and ask your question.
My question sort of got answered with what you had to explain, so thank you.
Okay.
Right. Thanks, then. Sandro Prakash.
Hi, Sandro. Glad to meet you again.
Yeah.
Connected probably last year or before that in IM network. Good to see you here, and thanks for this presentation. Got down few more things to make the pitch stronger. So my question is, right now, actually, when I am going to meet investor in this round, so I am looking for filling up the gap in the present round. We are raising 1 million. So I have 3 crore left. So if they ask me in the
You're on. I can't hear you. Is it me only or others
No,
also?
I mean, we lost him in between somewhere.
Oh, okay. Well, in the meantime, somebody else can
Abhijit?
come.
Sure.
Yeah.
So, hi Sandro, first of think you for the great presentation. I just have one question, that is in respect of entry barrier. So that particular point was not very clear to me. And like previously I used to work in a law firm. So like see what even the Bansals did, like they made Flipkart. But at that point of time, like anyone who could have made Flipkart. So sometimes it's about the execution, and like in startup world, it's mostly about execution. Anyone can copy your idea. You are going to so many events, like anyone can copy your idea, and if he wants, he can make it.
Right.
So that point is not clear to me. Can you just throw some light on that?
So entry barrier. So perfect example that you took of Flipkart, right? Now Flipkart guys were working with Amazon. They copied the same model and came into India, started doing it, right? So they had the first mover advantage in India. Let's be real. Okay, India as a market is pretty big, right? और Amazon तब enter हुआ नहीं था या हुआ तो बहुत limited capacity में था. They were like a homegrown company, and they would see for Amazon to kind of come and scale was slightly early in days, and they had the right time to step in. So they stepped in at the right time, build it up, scale it up. Because they were locals, they were able to kind of do it in a more better way, because they were able to connect with their team and kind of scale it up accordingly. So that kind of helped them a lot. So so वो फर्स्ट मोवर एडवांटेज हुआ, बट उसके बाद नो एंट्री बैरियर बनता है अब आज के डेट में अगर आप मेरे को बोलो मैं ई कॉमर्स प्लेटफॉर्म बनाऊंगा, देन देयर इज नो एंट्री बैरियर, राइट? सो देन से कि यार टन्स ऑफ अदर प्लेयर्स, आई मीन डजंट मेक सेंस टू मी, राइट? सो आई विल ड्रॉप इट, राइट? बट उस टाइम पे मिंत्रा आया है, जबोंग केम इन, कपल ऑफ अदर प्लेयर्स केम इन, राइट? But they didn't have the first mover advantage. But what they had was their solutions, right? So some said that, listen, here I'll deliver in say 24 hours. Some said that 2-day delivery, right? Some said that, listen, we more focus on women, right? So they kind of bring out the best of quality of say dresses for ladies. So in that case, people started moving on that. So there is something different that you offer. Till the time you don't offer something different, nobody's going to come to you, right? If you're going to offer the same thing, then what's the USP there? There's no USP, right? So you need to create entry barrier. Let's keep it like that. Other nahi hai entry barrier, create entry barrier.
Got it. All clear. Thank you. Thanks a lot.
Thanks.
All right, Mahi. Let's go ahead with your question.
Hi, Sandro. Thanks for the presentation. Hi, everyone. I'm Mahi, co-founder at Cancri, where we are transforming waste into advanced nanomaterial for batteries and capacitors. So I think last week we had a conversation with with an investor, and while we were talking about off the chart, we were talking about gross margin, and he mentioned that he actually looks at a higher percentage of gross margin, and that was something that I had heard first time. Probably we never had the conversation with any other investor. So if you can help me understand, is there any expected minimum gross margin that investors look at, and especially for hard tech?
Sorry, what is the product that you're doing? I didn't get that.
So we are transforming waste into advanced nanomaterial that goes inside batteries and capacitors.
And you're selling it to OEM.
Yeah, original battery manufacturers.
Right. So then in that case, so you're buying it from one end and selling, processing and then selling it to the other, right?
So we are making it from the scratch. So we are a manufacturing company. We make this product using our patented process and sell it.
It would vary, to be honest, from brand, product and enterprises to be honest. So for example, if I were to say that, listen, are you selling cosmetic product? Your margin, gross margin should be somewhere around 70% upwards of that, because that kind of gives me a healthy room for discussion. 70 भी कम बोल रहा हूँ, उससे ऊपर ही होना चाहिए, because you will have your distributors coming in, then you'll have your net margin, of which you will kind of take out salaries and things like that. So there are tons of other expenses that kind of adds on. In your business model, I would have to kind of have a deeper look at the business model to give you a sense of it. But yeah, a healthy gross margin is always better, to be honest, right? So if you don't have one, you can kind of see ways to kind of do that. there could be possible ways to kind of up your margin up. So that's not a problem. You probably would not be having a good margin right now, but at scale you will have, right? So then you talk on those lines saying that, listen, abhi nahi hai, abhi say it's 40%, tomorrow it would be 50, but a 40 cannot be 80, let's be honest. So it has to be calculated based on that. Or there could be other ways to kind of say that, listen, I'm selling it locally right now, so the price point here is low. But at the moment I start selling it globally, some international clients, my price points will kind of increase. So that could be my market opportunity to look at. So that kind of gives in a better opportunity. So I mean, honestly, these are just thoughts that I have,
Yeah.
but I think once I see the deck, I'll be able to answer better.
No, that's perfect. Just a follow-on question. Do investors also look at EBITDA? Or
Yeah,
it's
they
just
do.
okay.
They do. I mean, in your 5-minute elevator pitch, all that will not come in, to be honest, because in that 5 minutes, they are trying to assess you
Mhm.
as founders and the proposition.
Okay.
That's about it. क्योंकि 5 मिनट में और कुछ नहीं हो सकता. I mean,
So, 5 minutes में, I mean, what is that most impactful financial number that we can share?
talk about your current traction.
Okay.
You can talk about your current traction. You can talk about your market opportunity and your addressable market where you want to go for the next one with this fundraise. But stay focused more on what you've built, because that's the value, right? So that is something that will attract people. The other, what is more important is the founder themselves. What is your pedigree? Do you understand what you're doing? Do you understand? Are you from that background? Do you have education in that background? What kind of mentors or advisors do you have? Are they from that background? Are they able to give you the right, support and mentoring?
Yeah. Thanks. Thank you so much, Sandro.
Thanks.
Welcome.
So there is a uncompleted answer from question from Chandra Prakash. He's typed it in. I think it's more about like a bridge round. I think he's looking for raising 10 CR and already done with 7. Remaining
If the
3
investor
is
asks the name of lead investor, does it matter to tell name publicly because the term sheet has been confidential? We are looking at raising 3 crore. So that's subjective, right? So you can go and ask your current investor who's committed you 3 crore. Ask him that, hey, I have got somebody who's interested, but people are asking for my co-investors details. I mean, who's investing in? So would you be fine if I disclose that? So if they say yes, then you can tell. You see, I get so many deals where I get co-investors already sitting on this thing on the terms, so they're open about it. So I don't see that as a problem, to be honest.
all right. Kamalji?
Yeah. Hi, Sandro. Good to see you again. We met in Hyderabad a few years ago. Sandro, I wanted a little bit understanding of the speed dating format itself. So I understand 5 minutes with multiple investors, and 5 minutes is including the Q&A. And another one is is there going to be some separation between what the size of the investors are in terms of can we have different size deals basically for different investors? Is that possible?
Well, I think Arun needs to answer that. I don't know who are the other investors coming in. I am there, so I've told my bit what we look at. Arun, you might want to answer that.
Yeah, I'll just take it up with no problem.
So it's a 5-minute pitch, and then I think followed by that is 5 minutes Q&A, right, Arun?
Yeah. So I mean, 5-minute pitch and around 3 minutes for Q&A. So in all 10 minutes, including the transactions. So yeah, that's how we.
All right, we'll take it separately to understand how to keep it per
I'll
investor.
speak
Yeah.
with you.
All right.
Thank you. Aditi?
Hello, Sandro. Thank you so much for the presentation. I'm the co-founder of Gomaya. So we are producing a substitute of wood to be used as fuel in cremations and other industries. So my question is that, what % of equity is fair equity for the seed round?
So when you say seed, also, I mean, every round has a different definition. So when you say seed, are you saying pre-revenue? Are you pre-revenue?
Yeah.
Okay. See, it's subjective, to be honest, right? So It totally depends who's coming on board, but it depends what is the check size the other person is pumping in. So, I mean, it's quite vague to kind of answer like that. I can give you a gist, right? So, think about this, like when you go for an angel round, you as founding or founder or founding team should own close to about 70% of the company. Bare minimum. Post angel investment. ठीक है, क्योंकि उसके बाद आपका ब्रिज राउंड भी होगा अगर नंबर्स अचीव नहीं हुए, and then you do a series A, right? So by the time you do series A, you don't want to be diluted so much that a series B never happens with you, right? Then the only option left is to get acquired by a big company or take loan and pay off some of the investors, or you sustain like that, right? And if it works, otherwise uh, that's the end of it, right? But at the seat level, I would say anything from a 5% to 10% is fine. But again, it depends who's pumping in how much. तो अगर आप मेरे को बोलो 10 लाख डाल के कोई 10% ले रहा है तो मत करना. If that's what thing. So अच्छा, I'll give you a better number. So like 100x VC has a model which does 1 crore at 8% or something like that. But then that's different, right? Because that's only for the portfolio company, the companies that they take in as cohorts. The other way to look at it is because I'm part of a couple of these incubators, which are fund of funds where we invest also. There typically we do anything from 25 lakhs to 50 lakhs, and we end up taking somewhere around anything close to about 5 to 10, 12%. That's what we take.
Sorry to interrupt, but 100x VC right now is like taking 15% for 1.25 crores. So they have like made the deal.
Sorry, 8 pehle tha. Now it's 15%, right? But they've doubled also, right? Earlier they were giving only 25 lakhs.
Right now they're giving 1.25 crores.
Yeah, they've increased that significantly. But Aditi, to your question, I think if you tell me what is the amount asked, I mean, what is the amount that you're talking about, then I can tell you fairly this thing ki kitna hona chahiye.
Yeah, I think that is a discussion for later.
If it's 25 lakhs, then you should look at something like a 8%, 7-8%. If you're not getting anyone, to be honest, that's fine. But if somebody says that 25 lakhs for 20%, no.
That is no.
No. Because then it's it's going to be a problem for you in future. You don't want that.
Definitely. Yeah. Got it. Thank you.
Subjective. Right.
Welcome.
Yeah, Priyanka, you have a.
I had another question. I'll just introduce myself. I'm Priyanka. I'm the founder of Kula, and Kula provides upcycle services for clothes one already owns as a door-to-door service through a digitally responsive website. So we've been around for over a year as a concept, and we have been in business, like we went operational last year in August. We're a pan-India service, and we started off as essentially like a service, a door-to-door service, and then we picked up the Startup India Fund, which has sort of led to us pivoting slightly and getting stumbling upon deep tech service. Like we're working on our tech. So as a founder, and when I have 5 minutes for the lab, what's the story that I should share? The journey that I have covered, or what is it that I'm on to next? The pivot? What would you?
No,
suggest?
you first start with what you're doing right now.
Okay.
Right, that's more important. And then towards the end, if you have time with you, then you talk about that. But you can tell that, listen, hey, this is a pivoted model. And currently I'm doing this. And towards the end, you can say that, listen, earlier we were doing this, then we pivoted for whatever reason that may be. And that should be a justified reason in all means, right? So if you're able to narrate that properly, I think they'll be more than happy to kind of hear you out.
Sure. Okay. Thank you.
There's nothing wrong in pivoting, so that's fine.
Yeah. It's sort of become like a strength now, the reason to sort of add tech to it. And that's the reason we're looking at raising more. And otherwise, we meet our kind of growing slow and steady, but yeah, this will fasten the process. So
Fair enough.
thank you.
Thanks,
Thank you.
Priyanka. Any further questions? Shaleen, anybody? All right then. Thanks, guys. Before I'll request our committee member Sharad Bansal for a formal vote of thanks. May I request everyone to please switch on your cameras once we can take a picture of the session, please. Paul, can you help with the picture, please?
Sure.
Thank you.
Just a second.
I've dropped my email address also, just for reference if you want. Happy to help wherever possible.
Super.
No commitments.
So I think hi everyone, Sharad this side, and I didn't know I would have to do the vote of thanks, but I think I was also attending to learn from Sandro. And Sandro, this was a wonderful session that you had taken. I think a lot of startups are pitching actually for the first time to the investors, and especially the speed dating session is a very unique kind of it, because in the very small time, what to not cover is very important instead of actually what to cover. So you have taken it, you have done it really well, and I think this is going to be very helpful. What tells more is that a lot of people were asking questions also. So when they're asking, that means they were listening throughout, and that's something I think you've done great. So thank you so much for joining and taking out your time for this session. And I think on behalf of the entire Smash Up team, I would like to thank you. Thank you for coming.
Thanks,
I
sure.
look forward to see you
Thanks, Arun.
during the Smash Up.
Thank you. Yeah, surely. I'm looking forward to meet everyone. All the best.
Thank you. Thank you, everyone.
Thank you.
Thank you so much.
Thank you.
Goodbye.
Thank you.